Hi, welcome to the Market Alert for Tuesday, the 24th of October 2023. So Bitcoin and bonds bid after bearish bales, black gold and the dollar breakdown. So the dollar moving lower from that 20 bar moving average that we've looked at over the last few weeks. Oil falls on lack of Israel escalation, which is good news, while bonds rip as Ackman covers his shorts. So nothing of any great note as far as news is concerned. However, today we have that monthly horrible day, the flash news. So if you're an intraday trader, this is a bit of a pain because it's released every so many minutes. So we got 7 a.m, 8:15, 8:30, 9 a.m. and 9:30 in the morning. So you just have to be aware that this is going to be announced. And if the market's quiet, they will use this to move prices around. Okay, let's have a quick look at the implied volatility, and we can see this is still moving up. 15.54 for yesterday, up from 15.04 from Friday, so heading in the right direction for 100% retracement. We need to get up to around the 20 area for this to show a potential bottom, and I noticed that bank bailouts are starting to resurface, so we could have a lot more on the downside, despite the fact that everything is quieting down, or apparently it's quieting down in the Middle East. But we'll just have to wait and see on both counts, won't we? But yeah, let's see if those banking issues come to light. There is a lot of talk about this at the moment. Bank of America has 136 billion in unrealized losses at the moment, and that's just one of them. So again, because interest rates have been rising, the bonds that they've had on their books from lower interest rates have now given them a deficit, but they're unrealized losses at the moment, but they're still losses. It just means that they haven't got to show them. They're on a sort of a balance sheet that doesn't show. Smoke and mirrors, they call it, or creative accounting. Right, let's have a look at the markets and kick off with the Dow. So in the Dow, we had another down day, down to the 89% retracement. So we've got a bit of a significant amount of volume here, climatic volume, market at 89, so I wouldn't be surprised today if they don't try and use the flash news to try and bring the market back. Plus also there's a bit of a positive with the Middle East news there as well. Yesterday the electronic market down, cash market back overnight, so late night starting to bring the market down, and then we've just been stable and sitting at the close. Need to get above the DP to get anywhere near yesterday's high. In the German DAX, the market also finding a bit of support. Let's just have a look at the weekly chart because you can't see much on the daily chart. Marked up the 89 yesterday. The market's been down to this overnight, and also again you've got some decent volume coming in there now. Market needs to close above the 5 bar moving average, and then heading back between here and here would be areas of potential resistance, with the fibs there from 38 all the way through to 89. In the 30-minute chart, we sold off to begin with, and then we saw the market being brought back. So again, no surprise, V-shaped correction. Overnight the market has come off the DP and the close and heading towards the high up here as well by the looks of things. And like I say, they'll use the flash news in order to do this. In the S&P 500, also down at the 4201, we traded through this yesterday. Climatic volume oversold, and the market again trying to attempt a move back to the upside. Use the flash news for this. Yesterday, market down to the S1. Again, nice cluster of volume here in the 30-minute chart, up and then tested for some reason, I don't know what, because there was no economic news yesterday. So the market tests, moves back up, and then overnight so we see the market above the DP and the close as well. So yeah, it's certainly looking towards a bit of a move to the upside, considering we've had in the FTSE 4 days straight down at support, oversold, cluster of volume. The market's likely to want to move to the upside. 30-minute chart, down again at the open, all the way down to the S1, back up to the low and close where it became resistance, and then back down. As you can see, nowhere near the low this morning. There's the DP. Market wanted to head back to yesterday's high in the FT100 also. In the US dollar, as we saw in the headlines, breaking down a bit there below the 20 bar moving average now, which is good because that's going to lend support to the metals. So let's have a look at those. So in silver, still trying to hold. Thought it had been a better day given the fact that the dollar broke down. Silver went down as well, closed below the 5 bar moving average. Like I say, they don't want to get this back anywhere near the $25 an ounce if they can help it. If it does, then they'll sell it back to the downside. We are overbought. We have got a bit of supply in this market, so nothing would surprise me given we've got the flash news out today. 30-minute chart gives you the direction of where they really want the metal to go. It's only Asia that's moving the market up. DP lends a bit of support, but the high of 23.32 needs to be taken out in order to move higher. As we move on to gold, also moving higher. Again, you can see it's holding better than silver, as the market has no red bars or closing below the 5 bar moving average, which would be an indication of this. In the 30-minute chart, again, you can see that this was up and then traded sideways and up on Asian, and then DP, the market above this as well. In the gold-silver ratio, we're stuck in a bit of a sideways range, but we are trending up as well. We've got this sort of ascending triangle. They generally break to the upside, which means that silver's going to get hammered and or could get hammered, and gold stay more or less where it is. Okay, that's a quick roundup. Watch those flash numbers when they're released later this morning. Other than that, good to see that things have calmed down a bit in Israel, and let's hope that ends soon as we see what happens during today and what the market's reaction is going to be, as I say, to those flash numbers. Okay, that's it for this one, and from me, as ever, thanks for watching. See you in the next one.